Has Joe Biden just given us the green light for our next crypto bull run? Oh man, Biden just confirmed Silicon Valley Bank's bailout. This is huge for the crypto market, and in just 24 hours, the fortunes of the crypto market have changed. We were sitting here precariously on Bitcoin, falling as low as 19.5k, many shouting out that could we be visiting those 15,500 lows, and in just a couple of daily candlesticks, we are now back at 22.5 thousand with the sentiment very different. In this video, I'm going to break down exactly why this is different and why this could be the green light for us to head into our next bull run. Of course, I will caveat that with some down risk because you know that's what this channel is about. Smash a like, check out the link in the description to BINANCE, who are offering you some amazing awards. Now, we need to cover off exactly what Biden said. Here's a clip of what he said.
First, all customers who had deposits in these banks can rest assured, they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be, and this is an important point, no losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the deposit insurance fund. Because of the actions that our regulators have already taken, every American should feel confident that their deposits will be there if and when they need them. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works. And fourth, there are important questions of how these banks got into the circumstance in the first place. We must get the full accounting of what happened and why those responsible can be held accountable.
So as you can see, Biden was basically trying to explain that this is not a bailout. Now, in the great scheme of the words, if you're defining a bailout what we saw in 2008 and 2009, I agree, it's not a bailout. But at the end of the day, they have made the fundamental pivot to print money. They did not allow the depositors to lose their money, and therefore the government intervened. Now, what this means from a fundamental perspective has critical ramifications for crypto. First and foremost, we need to understand when crypto was going on its run from the COVID period, why did it go on its run? It went on its run because the governments of every central bank pretty much across the Western world came out and said, we're going to protect the people. And if that means we need to print at unprecedented amounts of money, we will do so. We will pay furlough. And they did that here in the UK, they did that in the States. We will pay various different schemes to get money into your pockets, to introduce liquidity to the market. Once the pandemic then subsided, you then saw that we had rampant inflation. Of course, you've just thrown a load of money into the economy, and of course, Bitcoin and various growth stocks such as Tesla benefited. But now that that was over, you're left with this inflation with no signs of pause, which is why the US government went on a mission to deliver its fastest rate hike cycle in 40 years. Here is the speed of the rate hike all the way up to our current Fed funds rate. Now, we know that up to just a week ago, Jerome Powell was still struggling. He came out in his testimony and he spoke about the fact that he may need to hike some more. There's still more work to do. Employment was still high, inflation was still tough, and we were looking towards tomorrow's CPI figure to see whether we were maybe even getting 50 basis points. But the fortune has changed. If you now refresh, and this is changing every minute, guys, you can see that 20% of the market, 20% is not insignificant. 1 in 5 market participants are expecting a surprise pause at the next FOMC meeting. Remember, Jerome Powell was hiking rates. He was trying to do this soft landing. But remember, if you keep hiking and then suddenly you realize you broke things, that was always going to be the sign that Jerome Powell would have to do an emergency pause to reevaluate what's going on. And we've definitely broken something, right? The Fed have broken the US banking market. by the Fed increasing rates at such unprecedented speed, it's put Silicon Valley Bank, Signature Bank, and many other banks which we don't know about right now in a hugely tricky position where they've lost the value of their bonds and therefore their balance sheet is upside down. This is why the US has intervened. They've not intervened just because this is a small issue. Why would Jerome Powell, Janet Yellen, and Biden give this such attention if this wasn't critical? If it was just a small regional bank, why would they pay any attention? But they know behind the scenes how many banks will be struggling with the same issue, and that is why they're stepping out to stop the contagion, to stop this from getting worse. And it could have got worse very quickly today and tomorrow. And that is why we need to understand that this is a fundamental shift in the environment. We were going into a steep rate hike with no signs of inflation really meaningfully coming down to that 2% mark, but now that doesn't matter. Jerome Powell is going to have to slow down at least to 25 basis points, which is what 80% of the market is priced in here, and maybe even deliver a surprise pause to allow everybody to take a deep breath. And you can see that markets are not only starting to price that in, but they're even starting to price in the idea of a pause and much less strict rate hikes at the next meeting as well on May the 3rd. And this is why we're seeing Bitcoin rejoice. A couple of positive days here on Bitcoin, now reclaiming our daily EMA ribbon. This is a huge day. We've got 9 hours left of this daily candle. If we can close above the EMA ribbon, like how we are right now, this is going to be huge for crypto, because this EMA ribbon, if you look very carefully, was about to flip. You can see the yellow band was starting to come over and flip below the red band, which normally indicate a big move to the downside. If we're able to nip that in the bud and get straight back up, we can go and mount an attack to 25. But not just that. It's far bigger than that. It wouldn't therefore just be a relief rally. If we zoom out to the weekly, you guys know this had been my northern star, right? I'd look to this and say, guys, until we turned our weekly EMA ribbon bullish, I can't just get too excited. Yes, I participate in this relief rally, but it's just that. It's a relief rally in the swimming against the tide. Jerome Powell is still not our friend. He's still increasing interest rates. How can I be super bullish about the next bull market? I can't be just yet. But now things are starting to change. Of course, we've still got the risk of this weekly EMA ribbon. We still need to go and reclaim this weekly EMA ribbon. And until then, bears will still be confident that they can throw us back down to the downside. But look at this weekly candle here, where my cursor is right now. That is an almighty doji candle. If you don't know what doji candle is, ijaz.uk/TA, all the things we're talking about here in terms of EMA ribbon and doji candles and all that stuff, I've made my TA calls for free, guys. So take advantage of that. Ijaz.uk/TA is not going to cost you a penny, and you can learn TA that I learned over 10 years. Now, this doji candle signals a reversal, which is huge. And now we're following that up with a strong week this week. We need to build on this momentum. If we can get good CPI tomorrow, I'm going to post a video later today on exactly what the expectations are for tomorrow's CPI. So make sure you subscribe with the bell notifications on. If we can get a good CPI reading tomorrow, we could definitely be amping up for a pause at the next meeting. Even if we don't get a fantastic CPI reading tomorrow, we could still be getting a pause because the Fed have proven that they're breaking the banking system. So this is really important now. We've got our low here on our weekly. We're now creating a higher low. And now as long as we can go and post our next stretch up here on Bitcoin, that could on the weekly chart give us our next move to the upside, moving us into our next bull market. Similarly, if you take a look at the dollar index, this was the bane of our existence. Remember, this turns inversely correlated to Bitcoin. So when this is having a good time, Bitcoin has a bad time, and it notched up 1, 2, 3, 4 solid weeks here throughout January and early February into its EMA ribbon. And we got worried that it was reclaiming its weekly EMA ribbon, and that would have been a disaster because we worked so hard to push this to the downside. But now when you look at it, it just looks like a nice retest. We're moving here to the downside. We claim our EMA ribbon. We go back into test. Now can we push the dollar index back down to further lows? Remember, every time we've had a bull market, the dollar index has had a sustained move here on the weekly chart to the downside. This is why it's so imperative that we can do this and push it to the downside even more. So this is a good sign. Dollar index falling is good for risk on stocks. Similarly, the US 10-year major retracement now into its weekly EMA ribbon, falling to 3.4. This just days ago was sitting above 4%, which is that key level on the US 10-year rate. Okay, so this is good that this is calling off. This is showing that risk is quickly rotating on today, with Bitcoin recording a powerful 3.3% move. Now, if you're not following my Twitter, make sure you're following me there on Twitter. I do post chart patterns and extra insights when I don't have time for videos. For example, this. I posted this saying we need to bounce from our EMA ribbon, and exactly as we expected, 50 minutes later, you then see that we did bounce off this EMA ribbon nicely as predicted. So you can see that here on the chart, bouncing down, collecting support from 22,000 and going to create a higher high. Very nice hourly movements here on Bitcoin, showing good bullish intent. Now, it wouldn't be one of my videos if I didn't share with you guys some of the risks, but some of the risks, which again I tweeted earlier, was that what if we do come back down here, we bounce at the 38.2 fib level, what if we go to 0.5 and then throw back down again? But we didn't. Then the question is, okay, what if this rally was just taking us into the golden pocket and then we get thrown back down again? But we didn't. Now it's looking very strong. Not only have we worked our way back up here, but we've got through our golden pocket, which is between 21.7 and 22. Now, ideally, what you want to see from Bitcoin is can it get a little bit of a cooling off, maybe collect some support and start working its way and mounting an attack at 25. One thing is for sure, you will see a lot of FOMO enter this market, but this time the FOMO is different. The FOMO actually has a reason. If the government is saying we're going to print, right? If the government are coming out and saying, we're struggling right now, we've broken the system, because let's not beat around the bush. This $25 billion backstop for depositors, it's a method of printing. Right? Either Jerome Powell and the government and the Fed are on your side, in which case they're giving money out, or they're hoovering money out of the system. All up till now, they were hoovering money, right? Now is our first sign that they're there to help. Things are getting difficult. They're giving money back out again. Does it not remind you of that pandemic period where money was just coming out free flowing? And that is where Bitcoin excels. That's where Bitcoin does well and starts to move to the upside. Exciting time, guys. Let me know what are you doing in the market. Smash up likes. Don't forget to subscribe. Check out this video here, and I'll see you in the next one.